and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is your show where you get all your stock-related queries answered by the experts. So do get ready for that. But before we come to taking all your stock-related queries, let's have a look at what the markets are up to. So Cheryl, first day of the week and seems like it's a kind of a muted session for Nifty as well as Bank Nifty. We are trading absolutely flat for Bank Nifty, but the pressure continues on Nifty 50 index.
Absolutely, Shrishti, a very good morning to you. But I will not want to concur with your view saying that it's muted trading session coming in for the benchmark indices. Given the fact that Nifty has slipped below the 200 DMA in today's trading session, that is the first time since October 2022. You have a Nifty that is actually trading at the lowest level for the year 2023. We have surpassed the budget day low as well. So yes, the pressure is definitely mounting on the Indian benchmark indices. No doubt, you have the Nifty Bank that is trading flat as we speak. But yes, at one point in time, it did give up that 39,900 mark as well. That is for the Nifty Bank. Talking about what Sensex is doing, Sensex is actually also dipping about 0.7% as we speak. A lot of stocks are adding on to that pressure, be it Bajaj Auto. You have Reliance Industries also that's declining in trade, adding pressure to the benchmark indices. Aishu Motors also is down and out in today's trading session. Some of the list of losers that have been actually slipping over the last 15 minutes. One is Mahindra & Mahindra. The other one is Adani Enterprises, Adani Ports. Also, you have Tata Motors that has actually slipped over the last 15 minutes or so. So, yes, these all counters are adding to that pressure. Nifty falling below that 200 DMA. Remember that if it definitely goes below the 17,300 mark, that also would be first time since the month of October on an intraday basis. So yes, pressure continues on the benchmark indices right now, trying to make some sort of recovery. But you have Emphasis. That counter is actually down and out in today's trading session. That one is actually seeing a lot of pressure, 6% down now for Emphasis. Let me bring on board my colleague Anisha to exactly tell us why such a reaction on this counter. Anisha, over to you.
Well, yes, Citi has written a fresh note this morning on Emphasis because they met the management and they have listed out the key takeaways. Well, the bottom line being that Q4 is going to be a bit soft and it's only from Q1 of next year is when we'll see a likely recovery. Remember, for Emphasis, the earnings in the last many quarters have been sluggish because they have a huge exposure to the BFSI vertical and mortgage in particular. And given the fact that interest rates have been going higher, plus home sales have been under pressure, we have seen that the entire mortgage business of the company was coming under pressure, and the pressure is likely to persist in Q4. That's the word which is coming in from the management, that the softness in mortgage business is likely to continue. It's only perhaps in Q1 we'll see some sort of recovery. Separately, they talked about how in Q3 there was a higher impact of furloughs as well as there was softness in mortgage segment, and going forward it's expected to improve. The deal TCV to revenue conversion is slower, and that's another worrying point coming in for the brokerage as well. However, they do maintain the direct segment is likely to perform better in Q4, and DXC segment is something that needs to be closely monitored as well. As far as the growth is concerned, it's Q1 of calendar year of financial year 24 wherein growth will likely benefit due to higher working days, and second quarter will actually see the benefit of the micro environment improving. But at least as far as the margin is concerned, the management is quite confident that they'll maintain the guided band of 15.25% to 17% range, and capital allocation is something which will be at the similar level. So the dividend payout will continue at similar level. However, they might get a bit more aggressive when it comes to the inorganic route and the M&As. So we'll watch out for that. But overall, it's a sell call coming in from Citi, and the valuations at 22 times are a tad bit expensive as well.
Thank you so much, Anisha, for highlighting all those details. So Emphasis is the counter, down around 6.5% in trade today, where Citi maintained its sell call for a target price of 1,750 rupees, and you're seriously seeing that pressure onto the stock price. But Kunal, coming to you for this particular counter, what are your views on Emphasis? Because Citi has a target price of 1,750. So do you concur with that? Do you see more pressure coming in?
So there could be some additional pressure which may come by, but I don't expect the intensity of the pressure to be as sharp as what you're seeing in the correction. Now, the good part is that the stock had already recovered, I think, if I'm not wrong, from 1800, 1900 levels to 2200, 300 plus mark. So the correction is now got the stock back into the middle point of the range. But the concern for the IT pack overall is such that most of the large caps and the mid cap IT stocks on the back of this selling have gone into a correction. So that could probably indicate that this may be something to do with the entire sector correction, which may come by for the IT pack. So near term wise, yes, maybe small bit of follow through for emphasis on the downside. But the bigger concern could probably happen if the large cap IT stocks, the likes of HCL Tech, TCS, Infi, Tech Mahindra, etc., if these stocks also start to correct.
Okay, so that's the view on emphasis. But let's move on to the buy now, sell now lens today. The topic today that we have is on two-wheeler companies. The focus is particularly on that particular segment because reports suggest that Bajaj Auto will cut more of its output on the back of the lackluster performance in their overseas market. And we have been seeing that their overseas and the international market performance has been subdued over the past few months. The reasons particularly is definitely the pressure that we are seeing in the African and the Latin America market. The companies have also been highlighting the same, and the currency devaluation led in inflation as well as lower availability of US dollar for the trade have hit the demand in those markets particularly. What Economic Time report suggests that the company plans to cut more production amidst the uncertainties. The exports will fall for the sixth consecutive month because do remember back in January 2023 the exports were already back to its COVID low levels, and another 25% cut in the capacity for their motorcycle as well as three-wheeler category is what we can see kicking in. For the March month, the likely production is to be around 2.5 to 2.7 lakhs of units versus company's capacity of 5.5 lakhs of units. And on the back of this news, the stock is clearly under pressure. But on the contrary, we have an interesting report from Morgan Stanley where they suggest that they expect that the medium term to long term prospects for the overseas market is actually great, and they find and they see this decline as an opportunity to accumulate this particular counter. So that's the view, a contrary view coming in on Bajaj Auto for Morgan Stanley. But for today, on the back of this report, the stock is clearly under pressure, Cheryl.
Absolutely. You have Bajaj Auto that's under pressure, but what does it mean for the other auto companies? And does even Kunal feel that Bajaj Auto right now, this dip is the right time to look to invest in this particular counter, just like what Morgan Stanley has highlighted in his notes? So let's bring on board our guest for today. We have Ashish Maheshwari as well as Kunal Bothra joining us on the show. A very good morning to both of you all. Thank you so much for joining us on ET. Now, and Kunal, let me come first to you then. What's your take coming in on Bajaj Auto and the rest of the auto pack? Where do you see value, especially in the two-wheeler space?
So in the two-wheeler space, I think Eicher Motors is the stock which looks extremely attractive purely on the charts because of the fact it's been holding about the 200-day moving average. Now Bajaj Auto as well, I think till last week the stock was holding up quite okay. I think it was at 3,858, 880 mark for itself. But then I think with this, with today's correction, the stock seems to now get into a phase of breaking down after a phase of consolidation, which may not augur very well for the charts for Bajaj Auto over the near term. Possibly this correction may take the stock back towards 3550, 3600 mark. So I would not be in too much of hurry of buying Bajaj Auto at current levels. In fact, traders should wait out for maybe another 4 to 5% correction before they look to buy back the stock at lower levels.
Okay, so that's the technical view coming in on Bajaj Auto, but we have also Ashish Maheshwari onto the show. And Ashish, a very good morning to you. What are your views on Bajaj Auto? Because month over month, we have been seeing that the major pain point for this particular company is exports. And not just that, company like TVS Motor has a major exposure to the international markets because we have seen a great run up in TVS Motors. So I would like to ask a question on TVS Motors. Because of the uncertainty in the international market, would you still be a buyer for this particular counter?
Compared to Bajaj Auto, the export market of TVS market is quite small because Bajaj Auto exports to almost 70 countries and TVS Motor is not doing that much exports. So I'm not concerned too much as far as TVS Motor export performance is concerned. I think TVS is more domestic market driven company, and with their new EV product launches, etc. This company will do much better compared to peer set like Bajaj Auto Hero MotoCorp. I think those sectoral outlook because of Bajaj Auto a negative export performance related report has slightly subdued, but I think the bounce back will be first in TVS. And we should not forget TVS was a stock which has moved out very swiftly in recent times from 1000 to almost 1125. So some profit taking is happening in the stock. But in my view, 1025 should be a good level to again start accumulating TVS Motor, because I'm not expecting any bigger disappointment compared to what you are going to see in Bajaj Auto or slow down sales in Hero MotoCorp and TVS Motor. This is one of the best stock to look at 1025 levels. Bajaj Auto is avoidable in my view.
All right, so that's the way of you coming in on TVS Motor as well as Bajaj Auto. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll be back with your queries. So viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Definitely Monday's blues kicking in for the benchmark indices, but you'll be surprised to note that Nifty Bank has staged a stellar rebound from the day's lowest point, approximately 330 points off the day's high lowest point coming in for a Nifty Bank. There you go, 0.5% uptick coming in for that one. So take a look at what IndusInd Bank is doing, ICICI Bank is doing. All of them have recovered from the day's lowest point. Also, Reliance Industries, key to note, the one that was adding pressure to the benchmark indices, has seen a recovery from the day's lowest point, approximately 0.8% off the day's lowest point. So let's bring on board our guest for today. We have Kunal Bothra as well as Ashish Maheshwari, as introduced in the first segment. But before we kickstart taking all of your queries, let me ask the question to Ashish. Then Ashish, volatile trading session. We have come to the end of the month of February and things have not gotten better for the benchmark indices. We are at 2023 lows. Where do you see markets headed from here on? What should retail investors do in order to keep their wealth protected?
Yes, there are two, three things now investors need to be present to, like how we are witnessing like an exodus of retail investors from day-to-day trading in the market. I think this trend will continue because for last 4 months were not good for day traders or small investors. So, in my view, in 2023, the volatility is going to be there for full year because there's a rising interest rate cycle and geopolitical uncertainty will keep traders on their foot. Another advice which I'll suggest is to preserve cash. Unnecessary, we should not indulge into day-to-day trade or some punt. Instead of this, preserving cash is a better strategy because once there's some clarity in the market, then possibly you can use that cash. Second, if you want to even buy companies, try to find out those companies where last full year profit is already earned by company in Q1, Q2, Q3. So you will not have any negative surprises left for Q4. And last but not the least, there's a lot of traders inclination towards doing trades in options in Nifty and Bank Nifty, etc. In my view, this is again a problem because the kind of volatility we are witnessing in the market, even you will make money one day, but you can lose big money or capital in coming days. So let's not indulge into too much of trading this call for the day.
That's the advice coming in for all our retail investors. But let's get quickly to all your stock related queries. And Kunal, coming to you for the first one. The first question that we have is coming from Anjali, and she has query on two counters. Firstly is L&T. She wants to know, is this a good time to add on to this particular counter? First question. And the second is on M&M. She already has these shares from a price of 1350 rupees. She wants to know, is this a good time to average this particular counter?
So I think the answer to both of the questions is in a very simple, clear trend that the markets have, so Nifty is broken below the 200-day moving average. Many large cap names which have been floating above the 200-day moving average, they're also now completing a phase of mean reversion. So to put it simple, both L&T as well as M&M, they could probably come back towards retest of their 200-day moving average. M&M is now very close towards its 200 DMA. I think the 200 DMA is at 1200 levels. Stock is at 1256. L&T, the 200 DMA is some distance away. It's almost at 1900 mark, 1910 mark, where the stock is at 2100 approximately, which means it's better that you wait out for maybe another 3-4% correction on M&M as well as maybe a 10% odd correction on L&T before you start buying the stocks.
All right, another one coming your way, Kunal. This one is coming from Sri Kutan and this one is on Sai, and he's holding some shares at a price of 932 rupees per share. He wants a short to medium term view. He wants to know what's your technical view on this one. Which level should he keep as stop loss and target for Cyient?
So it looks attractive on the charts. The stock seems to have gotten to a breakout mode. The breakout point is 935 for Cyient. So I would believe that keep 935 as a stop loss. And on the upside, you may look out for 1020 as an immediate target.
Okay, moving on to the next question, and Ashish, coming to you for this one. Manish wants to know, is this a right time to enter into Zensar Technologies at current level? What's your advice?
Okay, so as far as Zensar is concerned, again, like the stock movement we have seen in line with how IT stocks are moving. So nothing specific as such to Zensar per se, nothing wrong with the company. Company has given good returns to investor as such, but it's still 100 rupees down from 52-week high levels of almost 390 rupees. The stock has surely value, but I'll not advise to buy at this price point. In my view, as the stock has seen good run up in last 1 month, just wait for some correction. Otherwise, what has happened in PSU banking stock, where most of the investors has caught at almost at highs, you may also get such a stocks at their highs. So wait for at least 20-30 rupees downside in the Zensar before you enter. The stock is good fundamentally.
One more coming your way, Ashish. This one is coming from Santi, and he's talking about Sequent Scientific. He's holding about 408 shares at a price of 120 rupees per share, and he's suffering a loss of approximately 45%. He's saying that stock has only been falling, witnessing a bearish trend. He also wants to know what's the reason for such a stress that's coming on the margins of the company. He's saying that the margins have been under stress. It's impacting the bottom line as well as the top line of the company. So now he wants to know what should he do to tackle this sort of a loss in Sequent Scientific. What should he do and in his strategy that will turn out make his investment turn positive?
No, I don't think so. In the short to medium run, like you are going to recover or see those levels on which you have bought this stock, because again the reason is for last 3 quarters stock has delivered negative profitability, so they are incurring losses only for last in this particular financial year, and companies where such performance is coming, market is punishing hard. So this is the reason the stock is at 52-week low. So my suggestion will be to exit from this stock, and I'll suggest another stock which you can buy instead of this. This will be Zen Technologies. This will be a good buy at this price point at 260 rupees. I'm expecting Zen Tech can do much better compared to Sequent Scientific.
Exit Sequent Scientific and rather buy Zen Technologies is the advice coming in. But Ashish, once again coming to you for the next question. Parvinder wants to know what is the outlook on Phoenix Mills. He's already holding these shares from a price of 14.15 and is worried about after he entered this counter, the stock has been falling since. And the other counter he has is Jubilant Food, 30 shares from a price of 514. What's your advice on both of these?
Okay, so as far as Phoenix Mill is concerned, I'll advise to remain invested for some time. First of all, it's not that far from your purchase price. Second, the recent announcement of a new Palladium Mall at Ahmedabad is again positive. And this is comparatively much stable stock compared to peer set in real estate sector, because the kind of steady cash flow they earn from their malls, etc. So Phoenix Mill is a hold in my view. As far as Jubilant Food is concerned, again, I'm not that bullish on this particular stock. In my view, the kind of pressure that we are witnessing in Jubilant Food for last couple of quarters, and we have seen a lot of institutional offloading also in this stock. So whatever euphoria was there as far as Domino Foods huge expansion are concerned, I think they will also slow down. So instead of this, I'll prefer to look at Varun Beverages stock because the kind of summer heat it's already there, and what we are expecting coming time, Varun Beverage will outperform for sure in this year.
All right, this one's coming from Vishal, and he wants to know whether it's right time to buy LIC and Asian Paints for the long term. What's your take on this one, Kunal?
So LIC India or
LIC India.
yeah, so I think LIC India could be interesting. Yes, the stock has seen a sharp correction, especially post budget from the 740 highs to now I think 560, 570, where the stock is trading right now. So I believe that that could be an attractive bet. Asian Paints, I would be a bit circumspect as of now. Yes, it's come back into a good value zone, but I think it always makes sense to buy the stock when there is mild bit of pickup of price action. So maybe at 2,950 there could be a confirmation that Asian Paints has come out of a big correction, and that could be a good entry point for Asian Paints.
Okay, so that's the advice coming in on Asian Paints. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now, and like we highlighted before, the recovery in the market continues now. Nifty Bank is up more than 200 points right now, while Nifty is still trying to recover, and Kotak Mahindra Bank is leading the charts in Nifty 50 as well as Bank Nifty Index as well. Well, let's get back to all your stock-related queries, and Kunal, coming to you for the next one. The question that we have is from Shiva, and he says that, as you highlighted, Hind Copper is now back to 97 rupees 50 paise. So what to do now? Because he's holding these shares 8,000 quantity from a price of 114 rupees. So he's sitting at a loss. But what should he do next?
So I think at current levels, most of the metal/commodity names are looking a bit more oversold. Same is the case with Hindustan Copper. I would believe that if you're already holding from high levels of 114, the stock is already at 97.5 levels. Maybe 95 could be a stop loss which you can keep on the trade. But I believe that the probability of a bounce from here is much higher for Hindustan Copper rather than any further correction.
Okay, let me take this one coming in from Satya, because before Satya, I have everyone who's only asked a short-term query. So let me take this one for you, Ashish. He's asking about Vedanta, whether he should exit Vedanta. He's already holding some shares. He's suffering a loss of approximately 5% on his total holding in Vedanta. He wants to know, does it make sense that he should exit this one and look to buy another counter? And if yes, he should exit and buy another counter, then which one and why?
In my view, you should not be in hurry to sell Vedanta, first of all, because there's a stock which offers very good dividend yield. At the same time, whenever there will be rebound in metal stocks, Vedanta will be among the first mover. So though the stock is down at present because there's some softening expected in China market for copper, aluminum, etc. But in my view, it's going to be a short-term phenomenon, and again, metal prices will start bouncing back. So Vedanta as a hold, in my view, let's not be in hurry to sell. In fact, in my suggestion, if you get this stock or any investor get this stock at 280 levels, then even can be made a fresh entry also.
Moving on to the next one, and Kunal, coming to you for this one. The question is from Pratiksha from Oman, and she's looking for a fresh buy into Voltas and Symphony. What she wants to know that in the recent past, all these stocks have already seen good move on the back of that summer-related stocks and the up move coming in on that theme. And both of these counters are up around 15 to 18%. But going ahead for the next 3 months, she wants to know the support and the resistance level for these particular counters.
So, the move, I'll probably start off with Voltas, that from 740, the move for the stock took the stock to, I think, 925 levels. Now, if you remember, if you see on charts, 925 is the exact level the stock had hit in the month of November 2022. And if you look at the prior retracement, then the previous support for the stock was around 860 mark. Even in this leg of correction, so far the stock has made a low which is around 865, which means more or less this retracement is completed for Voltas from this 925 levels to 860 approximately. 860 should be a strong support for the stock over the near term. So maybe you can keep a buffer of another 1.5% for Voltas. And I would suggest that you could look to start buying at current zone, because if the stock gets into any kind of a recovery phase, breaking past over 925 as well as going maybe 10% higher from those levels is pretty much of a higher probability rather than any further correction.
Okay, this one is coming in from Jai Krishnan Kunal. M&M, Jai Krishnan has a price of 1,324 rupees per share. With the medium term, what should his strategy be with Mahindra and Mahindra, as well as should he continue to hold on, and what's our target and stop loss?
So yeah, you can look to hold on to the stock as of now, because the only point of stronger emphasis for M&M was that the stock has been one of the leader stocks from the entire auto pack, and at least it looks like that the stock is maintaining the leadership quality. It's been doing so over the last many months as well. So that could be one point of comfort for a stock like M&M. It's completing a 200-day moving average, as I mentioned earlier, that the stock may correct by another 30-40 rupees, maybe till 1200 odd mark or slightly below that. So I think if you're looking to average, maybe sub the 1200 mark could be a better point to average M&M.
Okay, moving on to the next one. Ashish, coming to you. Mohit has queries on two stocks. Firstly is Coal India. He's holding 500 shares from a price of 152 rupees. And the other counter is 150 shares of HDFC Life from a price of 645. He's invested in both of these counters, but his investment horizon is still for the next 3 years. What will be your advice?
Yes, I think both stocks you can continue to hold. Coal India, anyway, you are making money, but at the same time, looking at the turmoil situation, what is there in the market nowadays, now the more and more money will shift from high beta stocks to more defensive stocks where certainty is there as far as cash flows are concerned. So Coal India is one of them, and even HDFC Life will be having a lot of portfolio churning, because a lot of money from LIC will shift to SBI Life and HDFC Life now. And there's a reason both are hold in my view for 2 years perspective.
Okay, this one is coming in from Manish Raju Kunal, and he wants to know about Macrotech developers. He has some shares, about 100 shares that he has been holding from the levels of 1,060 rupees per share, sharp fall from those levels. So now he wants to know whether he can average right now, and if yes, then what sort of a price should he look to average, Lodha?
Well, I would suggest to not to average at current levels for the stock, because this correction has been very sharp, very swift, and what you're seeing today is just a mild bounce back of the oversold nature of the stock price. I would believe that probably it's a process of another 2 to 3 weeks where the prices should settle into a trading range, and maybe try and retest the previous lows of, I think, that 700 mark for Macrotech developers. So I would suggest not to be in a hurry to average out the stock. Wait out for maybe another couple of weeks. I believe more selling could probably come by into this name.
Okay, moving on to the next query. Ashish, the next question is Z Entertainment. Shiva has asked this query, pardon please, RK Ahuja has asked this query on Z Entertainment, and we have seen a sharp fall in this particular counter, though the company did get an interim relief on the from the NCLAT, but other than that, there has been a ban on the new F&O contracts by NSE. Today as well, the stock is under pressure, but RK Ahuja wants to know, is this a good time to enter this particular counter?
No, I'm not that bullish as far as Z Entertainment is concerned. Again, the reason is as now promoter holding is very small here. So it's mostly institution and retail players which are holding most of the company. And now only trigger is when the merger with Sony Entertainment will really take place. And this kind of news related to NCLT, etc., are negative, but at the same time, the stock was almost near 52-week low only. So I am not expecting any major interest coming in the market where already so much volatility is there. Nobody like to buy aggressively such stocks where some uncertainty or some events are there. So my suggestion will be to exit Z Entertainment at between 190 and 195, and let's not make fresh entry. It's not worth at this price.
All right, the next one that I have, or rather, let me add on to this one, Kunal, Z Entertainment, because even Deepak has the shares. He's accumulated Z about 1700 shares at a price of 282 rupees per share. For the last 2 years, he's been accumulating this particular counter. Now, should he exit or continue to hold on? What's your strategy for this one?
See, first thing is that buying at 280 levels and still holding on to the stock when it was breaking all those major supports, 240, 220, and then 200. I think is a bit of a introspection which you need to do for your holdings as such, in the manner of discipline or stop loss which you certain for stocks. But then right now, if I look at the charts for Z Entertainment in the last 3 days of heightened volatility, generally it is said that these high kind of price gyrations, they lead to eventually form a near-term bottom at place for stock prices. So I would eventually believe that from here on, from that 175 odd mark where the stock made a low, I think 2 days or 3 days back, from those levels the stock can see a reasonable bounce, maybe come back towards 200, 205 odd mark. So I believe that on every rallies which you get for Z, maybe over the 200 levels is where you need to start reducing as well as offloading your stake.
Okay, moving on to the next question, and Ashish, coming to you for this one. Siddharth from Bangalore has been holding shares of Barbecue Nation from a price of 1150 rupees. Is this particular counter on your radar too? And since he is sitting at a huge loss, what to do next? Exit or average out this particular counter?
I think whatever euphoria was there related to such stocks in restaurant business, etc., is also getting over, because wherever the valuations are high, there's a lot of offloading we have seen from those stocks. So there's again a company making a 7 crore rupees profit per quarter and still having a market cap almost 3,000 crores. So in my view, still overpriced. As all these stories are good when the market going is good. Now market is also going the one way up. So these stories will keep on underperforming. So my suggestion will be exit from this counter. And I suggest instead of this, you look at Olectra Green Tech Limited, which has again into EV bus segment and came out with the recent announcement of hydrogen powered first buses in India. And the stock is still available at 200 rupees below from 50 to week high. And again, they have made profit of around 37 crore, which in last full year they made 35 crores. So this stock holds still merit compared to Barbecue Nation, and I think it will help you to recover some of your losses.
More coming your way, Ashish, this is from Indu, and Indu is saying that she was aware of the fact that you've been bullish on Sona BLW or Sona Comstar as we know it. She wants to know, has your view on this particular counter changed lately due to the recent underperformance of the stock, the situation in the Europe? Is it still a buy from your side?
No, now it's no more a buy from my side, because we have seen a lot of liquidation happening from institutional investors, and as rightly pointed out, like in Europe, things are not that good per se. So instead of this, I'll suggest Samvardhan Motherson. I say that is Motherson Sumi stock is much better after this SAS acquisition. So better you invest there at in today's fall compared to Sona Comstar. In fact, Bharat Forge can be also looked at as an alternative to Sona Comstar.
Okay, Ashish, once again coming to you, because Tapas Chandra wants to know your view on CG Power. He's holding the shares near about the current market price itself, so wants to know any target that you have in mind for the next 1 year.
100 rupees upside is possible in CG Power in next 1 year. I'm very bullish on this counter, because again, the kind of huge order book they are having from transformer sector, and their foray into power and ancillary equipments, as well as railways also will start giving good results in coming quarters. So CG Power, in fact, any other investor is also looking to buy. So this is one of the safest bets in today's volatile market.
Right, with that, let's actually kickstart with the rapid fire. The first one is coming in from Vimla George, and this one is for you. Kunal wants to know whether she should exit Polycab right now and re-enter at lower price. I'm not sure if she's making a profit.
Yeah, I think it's a good strategy to exit at current levels and wait out for maybe another at least 150 rupees as a correction to buy back.
Okay, Ashish, the next question is from Anubhav, who has been holding 50 shares of Jubilant Ingrevia from a price of 507. Currently at a loss. What to do next? Ashish, this one is for you.
Yeah, I suggest exit.
Okay, Kunal, Vishal wants to know, is it good time to add Reliance Industries given the fact that it is declining in trade?
Yeah, I think it's a very good time to buy Reliance Industries.
Okay, coming to you, Ashish, the next question is a viewer wants to know the advice on IRCTC and Tata Power. Has been holding IRCTC from a price of 714 and Tata Power from 225. The viewer didn't share his name, so your advice on these.
Exit both will be a good strategy because I am expecting more downfall in both these stocks.
Okay, Kunal, Ashwin Anand is asking about Nifty B's ETF, 100 shares for the long term at price 194. Wants to know what would be a good level to average further.
Yeah, so broadly it tracks the Nifty 50 movement, bullish on the index from that kind of a time span. So I think you can start at current levels and maybe another 5% down, you can look to average further.
Okay, Kunal, the next question is from Tumkar. Has been holding shares of SBI Card from a price of 825. Sell or hold?
I would recommend to sell.
Okay, Rajesh Maheshwari has Hindalco 500 shares at the price of 425 rupees per share. Does it make sense to exit, hold, or add for the short term, Kunal?
I would suggest to hold your existing quantity and possibly on the 400 or slightly below that level, you should look to add.
Okay, Kunal, Omkar has been holding shares of HDFC Bank from a price of 1350 rupees. Any targets that you have in mind for this one?
You can look to hold on. My sense is that the stock should now be ready for a breakout on the upside. 1650 could be an immediate target for HDFC Bank.
Okay, Venkateshan, Kunal wants to know if Gujarat Fluoro is looking good on the charts.
Yeah, the stock has corrected quite smartly, and I think recovery has also happened for Gujarat Fluoro. Stock is back at 3000 levels, looks attractive. You should look to hold on as well as buy.
Okay, but with this, it's time to wrap this edition of Rapid Fire. Thank you so much, Kunal and Ashish, for the Rapid Fire session. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's mark SpiceJet for you, because remember the SpiceJet board was all set to meet today in account to basically evaluate options for capital raising, and that board meet has concluded, and they've approved the issue of shares to qualified institutional buyers worth about 2,500 crore rupees. They're undertaking slump sale of their cargo business. Also, what they are saying is the debt to equity swap with aircraft lessor Carlyle Aviation Partners. They are saying that they've approved share issue of on preferential basis worth up to $29.5 million to aircraft lessors. And also they are saying that they are going to exchange the outstanding lease liabilities for an aggregate amount not exceeding $65.5 million into CCDs of SXPL. We'll actually try and connect with our researcher for more information on this particular development. But what they are saying is they've approved share issue on preferential basis at 48 rupees per share to aircraft lessors. So that is a SpiceJet for you. The stock has reacted to that particular development, a 4% uptick coming in on that one, Srishti, as we speak.
Well, yes, absolutely. SpiceJet has been in focus, and today on the back of this news is seen to be reacting. But with this, it's time to wrap this edition of Buy Now, Sell Now. Thank you so much for watching.